Ladies and gentlemen, good day and welcome to the Matrimony Q2 and H1 FY2026 conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jairam Shetty from ICICI Securities. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of ICICI Securities, I would like to welcome you all to Q2 and H1 FY2026 earnings call of Matrimony.com. From the company, we have Mr. Murugavel Janakiraman, MD and CEO, Mr. Hari Govind Krishnaswamy, Chief Financial Officer. The call will begin with brief management remark followed by Q&A session. I would like to hand over the call to Mr. Janakiraman for his opening remark. Over to you, sir.
Okay, thank you. Good evening, everyone. We achieved a 7% growth in our billing in Q2 compared to Q2 of last year. With various initiatives and strategies, we expect double-digit billing growth in the coming quarters. We have made strategic investment in Bharat A-Coach Spiritual Tech Private Limited, which is an AI-powered platform for astrology-related services and for learning Vedic Shastra. Now coming to the results, in Q2, on a consolidated basis, we achieved a billing of rupees 118.4 crore, a growth of 6.7% year-on-year, and a decline of 6.1% quarter-over-quarter. Revenue was rupees 114.6 crore, slightly lower by 0.8% year-on-year and 0.6% quarter-over-quarter. Key highlights for the matchmaking business in Q2 are as follows. Billing at rupees 117.5 crore, a growth of 6.9% year-on-year, and decline of 6.2% quarter-over-quarter. Revenue at rupees 113.5 crore, slightly lower by 0.6% year-on-year and 0.5% quarter-over-quarter. Paid subscription were 2.39 lakhs during the quarter, a decline of 3.5% year-on-year and 9% quarter-over-quarter. 84 matchmaking business grew by 10.8% year-on-year and 2.9% quarter-over-quarter. We facilitated over 25,000 success stories through our matchmaking platform. Now coming to the marriage service and other business, billing was rupees 93 lakhs, a growth of 4.9% quarter-over-quarter and decline of 20% year-on-year. Revenue was rupees 1 crore, a decline of 17.5% quarter-over-quarter and 15.1% year-on-year. EBITDA loss for the quarter was rupees 2.8 crore, a compared to loss of 3.3 crore in Q1 of FY2026 and rupees 3.6 crore in Q2 of FY2024. Our billing and revenue outlook for Q3. The matchmaking billing on year-on-year basis is expected to post a double-digit growth in Q3. Marriage service other business is expected to be higher than Q2. We launched AI chatbot in customer service in one of our domains, and we launched it for all the domains once you fine-tune our chatbot. We are also working on various AI initiatives to improve our customer experience and also drive productivity. Let me hand over to Hari Govind, our CFO, to comment on the key profit highlights. Hari, over.
Thanks, Muruga. Our EBITDA margin for the matchmaking business in Q2 was at 17.1% as compared to 17.6% in Q1 and 22.6% a year ago. As you can see, the gap between billings and revenue has been widening in this financial year due to introduction of long-term packages, because of which the revenue and EBITDA has been lower compared to last year. This temporary drop in revenue to billing ratio and EBITDA will flow to P&L from Q4 onwards. If we were to compute operational profits based on billing, the profit margins are slightly better in Q2 compared to last year. In summary, we would rather explain the temporary drop in financial metrics to investors and analysts than not doing the right thing for the business, that is implementation of longer term packages. Our strong operational growth is further evident by steady increase in cash flow from operations in Q2, which was at 14.6 crores compared to 14.3 crores in Q1 and 10 crores in Q2 last year. Marketing expenses for the matchmaking business in Q2 were 45.8 crores. It was 46.7 crores in Q1 and 45.2 crores a year ago. Excluding marketing expenses, margins for the matchmaking business stood at 57.4% versus 58.5% in Q1 and 62.1% a year ago. On a consolidated basis, EBITDA margin in Q2 was 10.8% compared to 11% in Q1 and 15.2% a year ago. Tax rate for the quarter stood at 21.96%. PAT is at 7.8%, a decline of 7.7% quarter on quarter and 41.1% year on year. Share of loss from Astrovision, our associate company, is 6.2 lakhs. Cash and investments balance as at Q2 is 328 crores. ROCE is 8.6% on an annualized basis. On the outlook for Q3 margins, we expect the PAT to be in line with Q2 levels. I would like to end with the customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company unless it is required by law. Thanks.
We'll be happy to take any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prem Lal from IBM. Please go ahead.
Good afternoon, sir. I'm Prem Lal from Hyderabad. Hello?
Yes, please go ahead. Yeah.
So, in that gated communities, in the most of the gated communities, in that lift area, add and more display is there, sir. But haven't seen any advertisements in that matrimony. In that, in any TVs, they can through remote they can change, they can skip in that in the YouTube and all. But in that add-on more ads, right? Nobody can able they don't have right to skip and all. While reaching the lift, right? They can see that why our matrimony is not advertising in that area. And another question: when advertisement costs come down and profitability will increase in coming quarters or next year or what? That is the only thing.
Yeah. Okay. Thank you. In terms of advertisement, we undertake various marketing initiatives, be it TV, digital platform. As you know that there are plenty of avenues to advertise. It's important that we choose the right mode of advertisement and that gives a better return on investment. So that's the approach we take. In terms of the profitability increase, we definitely see that happening from because already we started growing, and we expect a billing growth. This quarter we're talking about double-digit billing growth because of the introduction of in long-term packages and our billing as a gap revenue. There's almost like 20 crore of difference, and we expect all this things flow from quarter 4 to some extent, and Q1 onwards. All this there is the billing will flow into the gap revenue. So the profit will increase to a double-digit number. So most likely from quarter 4 onwards, and obviously from starting Q1, the profitability will really move up with that. So even the marketing.
Add-on more is more effective, no, sir. Advertisements is more effective. Add-on more.
Yeah, no. Again, there's a marketing. Evaluate various opportunities. Choose what is appropriate and the right ROI and that. So anyway, appreciate thanks for suggestion. The team definitely look at various avenues and choose whatever you feel is seems like the right ROI and other.
Yeah, thank you, sir. Thank you.
Thank you very much. The next question is from the line of Ashish Behera, an individual investor. Please go ahead.
Yeah, hello. This is Ashish. Am I audible?
Yes, Ashish, but so it's some bit of, so I know there's a speaker phone, there's some bit of noise or echo actually. So.
Hey, Muruga, is it better now?
Yeah, you're audible. Please go ahead, Mr. Ashish.
Yeah. See, Muruga, just a couple of things, right? So if we look at ad or marketing spend across Matrimony and Info Edge, right? So if I combine both of this, I mean, excluding obviously Shadi, right? So it's around 230 crore, 240 crore, right? So, I mean, if I look at industry structure, looks like Matrimony and Jeevan Sathi, right? Both of them are literally funding the ad industry rather than making money for themselves. At least that is the sense I get from a macro picture advertising spend across both these forms. Is there any opportunity to explore synergy to, reduce ad expenses, or how does the future look like, sir, from an ad expenses perspective? That is first question. And so second question I have is on the adjacent businesses that you had set up, right, over the last multiple quarters, Mera Love, the jobs portal focusing on Tamil Nadu. So is there any traction that you are seeing, or do you expect any acceleration, or do you see not much growth, and so that you can take a rational decision? So your comments please on both these questions.
Thank you. Appreciate. Regarding the first one, ad expenses, again, there's also the three players, majorly. And Jeevan Sathi, by and large, is limited only to the northern market. And we are a pan-India player, so the market is spent across the geography. So there is also other player as well. So while definitely compared to what had in the past, some bit of rationalization happened. So we also don't see that at this point in time the marketing expenses further moving up. But obviously we have to take care of the branding advertisement across the market, not limited to Jeevan Sathi operating only by and large northern market. Since there's other players, there's advertisement, we also need to ensure that we continue to advertise and ensure that our share of voice and our share of marketing is there, and particularly on the TV media. So, but yeah, the competition intensity reduces on the marketing spend on the offline medium. Yeah, we also rationalize. And today, most of the spend, is on the TV side. So anyway, so it's not that Jeevan Sathi, even tomorrow doing something in the northern market, that will now impact our marketing spend in the rest of the market, because there's other player as well. We also need to ensure that our share of visibility is there. So that is the ad expense at this point. And so compared to how it was in the past, it has definitely come down in terms of competitive intensity, but still remains. So we don't see further growth, so significant growth of marketing will be operating at this point and looks like a similar level of marketing spend until there's something changes. That's the point number one. Again, if you look at year-on-year, the marketing spend has come down on matchmaking, some marginal reduction, in spite of there's an investment in newer area. That's the point number one. So invest begin some elite matrimony. So within the marketing, we are shifting some other spend into the areas of growth which you want to have. The second one is on the traction on many jobs and the Mera Love. So Love.com also, let me talk about. So many jobs, it's crossed 1 million downloads. It's probably crossed 1 million registration only in Tamil Nadu. Then probably within the next quarter. And good Play Store ratings, good Play Store ratings, good feedback. We continue to get the feedback from customers, continue to make the product improvements, started monetizing. The last couple of months started monetizing, still in the early stages. So we'll continue to make product improvement, watch in Tamil Nadu for next couple of quarters. Then you may go either across south or you may go pan-India thing also. So at this point of time, things on the right track on the many jobs. And in terms of Mera Love is a long-term investment, because we are talking US diaspora. That's the investment we are making for maybe 3 years down the line or 4-5 years down the line. Also, it's not only for Indian Americans, we decided to be positioned for the Indian diaspora, because there are 30 million Indian diaspora. We are looking at Mera Love can address Indian diaspora. So we are repositioning, going to continue to invest in that opportunity. Love.com, that's another thing launched. We relaunching Love.com by the end of this month with the pushing on serious relationships. So we are just we launched the product, got some feedback. We are relaunching the product by the end of this month. In terms of other things about wedding services, definitely the focus on the month of venue booking. So that's a focus in Tamil Nadu. You want to facilitate venue booking for the customer and get a commission on the venue booking. That's what you're focusing on. So it's not the focus on the listing revenue, it's more on the commission-based revenue is the focus. That's the shift we are making on wedding sales. At this point of time, these are shifts we have done, and we continue monitor, but we feel these things, the steps what are taking in the right direction. So we probably see that in a couple of quarters, some traction on the wedding services, because the strategy shift what we have taken, we already working on those directions. And many job probably couple of quarters down the line, we'll probably, when we decide to go pan-India, we'll probably give an update on what's going on. Our plans out. That's the strategy at this point. But at this point, the product, we believe in the right path. It's going well. It's addressing the segment. It's got our feel that it's an opportunity.
Right. So just a follow-up, right? So MeraLove.com, the blue-collar jobs piece, right? So do you have some internal KPIs to track whether they are meeting your expectations or not? And what's been the insight so far? Because obviously Matrimony is a cash-rich company, right? So capital allocation is the foremost aspect, should be a foremost aspect from the board perspective, right? So are you tracking any KPIs, sir? If you can just share about that.
We are not sharing publicly what is the KPI, but obviously, any product, you look at a certain metric, certain benchmark, certain things. Also, you may know that some of the initiatives like Love.com, the new initiatives of MeraLove, the monetization will happen only after reaching a certain threshold in terms of user base. Because obviously, you have to get the base and supply and use profiles base. Then the monetization can happen. So that way that, Love.com is a product going to be launched. Obviously, you have certain internal benchmark KPI. Post that, the monetization will start. And you definitely have the benchmark to evaluate whether it's in the right direction or not. Because when we launched Love.com, we went back, it was not in the desired expectation. They went back, we strategized. We are launching a new product at the end of this month. So
got it, sir. And sir, what about the buyback strategy, right? So, because that's been an approach you've followed a couple of times, right, over the last 3 years. So is that, does that lever also remain in place to reward existing shareholders?
No, the board will look into it, because I think the 1 year is not over yet. And post that, I think the board will look into the various ways to reward shareholders. So the board will decide on this.
Right. And last one, sir, on astrology, how is it going, sir? Can you just throw some light on that?
Astrology, we are launching again. There's a delay in launching the product. We are launching an AI-based astrology product because we will be end of the month. We'll be launching the product. We will be answering one question powered by AI using Vedic astrology free. Post which we want to monetize it. So basically, the earlier model was you got a human astrologist answer the question free, and the monetization is one order at the desired level. Now we are changing the first question free by AI, and so that's a free charge. And we want the users can continue the AI-based astrology by paying money at a small money, or they can also offer human-based astrology paying money. They want to try it out. Okay, so we are launching the end of this month. And we'll see that, then we're going to integrate the AI free chat into all our products, the beginning matrimony products, and we want to see what kind of traction we are getting. Then we decide what to be done.
Got it. Sir, last one, absolute last one. So I had read sometime back on the Wall Street Journal that, on the service, right, shopping service called desc. So one of the popular services they offer is basically prayers and charms, right? So people actually, due to recession or, maybe due to good times continuing, people actually come and, take the service of prayers, charms, etc. Have you heard of it? Is this something that could be of interest or some synergy around it? around your existing services?
So, see, anything related to marriage could be off, but again, as I said, at this point of time, we have enough and more things going on, and we want to focus initiative which we already launched and create traction, make it successful before think of doing something in the allied area or even unrelated area.
Okay, got it. Thanks a lot.
Thank you very much. The next question is from the line of Damodaran from Aquitus Capital. Please go ahead.
Yeah, thank you for the opportunity. A lot of my questions have been answered, but just a few on. Firstly, on the longer term products that we have launched, can you elaborate what exactly these are? Because as you mentioned in the opening remarks, the delta between the billings growth and revenue growth is fairly high, and my understanding was that the basic product that we have is the duration is 3 months. So can you just throw some color on this? What's the new product and what's the share of overall billings, if you can disclose that? I'll ask the rest of the questions after you answer.
Yeah, so in terms of the beginning of the year, we introduced sort of 1-year package. But again, there's a continuity fee also after 1 year. The user wants to continue beyond that. They have to pay the continuity fee. Basically, the thing is that the people go for 3 months package, and sometimes, not everyone renews it also. So obviously, renewal is good part of our revenue contribution. So since marriage, not all the marriage happen within 3 months. Sometimes takes a little longer duration. The idea is, we can offer a little longer tenure package so that, so they give the advantage user rather than taking a break and continuing it, and thereby missing out on, the continuity and profiles or communication to them. Into this package, so there is certain percentage of the users are going for this package. That was the reason for this one. It's maybe little over around 10% sort of thing. And that was the reason for, since we introduced the beginning of this year, so you are not getting the benefit. So you probably take the end of Q4 or early Q1 get the full benefits. That was the reason for the difference between the billing and the revenue gaps. So that will get simply introduced in the very first year we are seeing this one. So in a matter of a couple of quarters, this gets addressed in the sense that we get the revenue negotiation. It's a more of giving some option to the customer who want a longer tenure, and which also helps the customer also be able to monetize it.
Sure, sir. Understand. And is there guidance for, this for near term, the Q3 PAT guidance which you said could be flattish from Q2 levels. Is that largely because of this issue of billing growth not translating into revenue, or do you see any investments in advertising or employee costs or any other spends going on?
No, mainly this reason. In fact, even this quarter also we see the billing with the revenue gap. So starting Q4, we'll get this the benefits, and with profit move from quarter 4 onwards. And according to 2 things, Q3 one is about the building with the gap revenue. Q2 normally the seasonality wise also quarter that normally there's a Q1 as a Q2. So common are these 2 factors. So starting Q4 the PAT numbers will move up, and starting Q1 then only see the good jump in PAT happening.
Right, sir. And do you expect? I think in the Q1 call you had hinted that you hope to reach a billing of 500 crore this year. Do you still think that's possible?
Yeah, pretty much on track to, I believe, to get that number on matchmaking, on billing.
Sure. And one question on employee costs. So I think your employee costs have kind of gone up to 39 crores. It used to be around 36 crores 100. So any specific reason?
There's sort of one other cost in terms of in quarter 2. One was that I didn't want to.
Yeah. So this is close to more than 1 crore, close to 1.5 crore. There were one-time expenses which were incurred in Q2. So relating to certain provisions that we had to make to comply with certain laws. So it's a one-time cost, right? So yeah, So all put together, it's around 1.5 crores. So that if you remove that, it will be around 37.5, which is 37.5 to 38 is what is the steady state.
Okay, sure. Then one question on the small stake that you have purchased. So how should we view this? I mean, is it a financial investment, the Bharati Coach 4% I think stake that you bought, or will we invest, or will we take it up, or will we invest in more of these? Will we be making more of these investments? So I just wanted to understand your thought process behind it.
Oh, it's an investment. It's a financial investment, and we'll see. Depends on again, it's a AI astrology study. It's related to in our industry, and we also see an opportunity. So we'll see how it goes, and depends on how the company performs. You may invest further. All depends on. I keep it open.
Okay, I think that's all from my side. Thanks and all the best for the coming quarter.
Thank you very much. Participants who wish to ask a question may press star and 1 at this time. The next question is from the line of Abhishek Banerjee from ICICI Securities. Please go ahead.
Hi, sir. A couple of questions from my side. First is that what do you think our market share is now? It used to be around 60%, right? So what in your sense is our market share as of now on a revenue basis?
I think, since we don't have the information about that number other players, I think it'll be around maybe similar to that range or maybe slightly less. We don't know, maybe 55 to 60. We don't know exact numbers of other players. So maybe around 60%, that's what we see. And so, yeah.
And so what do you think about growth, coming back to a double-digit kind of level? And so we have tried, giving timelines in the past, but what has also happened is that for some reason or the other, it has really not worked out. So when you are talking about, growth recovery from Q4, is there something that we are trying to do differently which gives us the confidence that we should, get back to growth from Q4, or is it just on the basis of the billings that you're seeing?
It's one is that it's based on the past thing, whether one is that today the billing and gap revenue, which already spoke because on account of the launch of the longer duration package. And as we speak in quarter 3, as on today, we are on a double-digit growth. So that's the reason we are able to say with the confidence. We believe we're able to achieve a double-digit growth in this quarter. And also the trend shows that the double-digit growth will continue in Q4 as well. And also because on account of the billing as a gap revenue, which was in the longer, because of longer tenure package that introduced in quarter 1, the benefits start coming from Q4 onward, and Q1 where you get the full benefits. The combination of two things, or three things I would say that. One is that increase in revenue is happening on account of the realization of the billing versus gap revenue. Point number 2, on account of continuous the growth, billing growth is happening because last year the degrowth, we started growing quarter on quarter, moving to double-digit growth. That's a point number 2. And the expense remaining at the similar level on marketing. We've also optimized, fine-tuned. So we expect a combination of all these factors. Definitely the pattern moved from quarter 4 onwards, and Q1 where we see that the good jump in the PAT margin gap in the market. So it's based on the past data, what's currently happening based on the future outlook.
Understood. With regards to the competitive intensity in this space, do you have any visibility on whether there could be any consolidation in this space at all?
So I don't think anything happening at this point of time, and so.
Sure. And in terms of our balance sheet situation, obviously we have decent cash balances, but we are not really being able to grow that meaningfully.
I mean, given the muted earnings growth. So I'm just trying to understand, is there any more, are there any more assets which you think are non-core, which, could be monetized in the medium term?
No, nothing like that this one at time. And in fact, we have some other initiatives in very, very early stage. You want to, make the good progress before whether you want to do any of those assets. So at this point, to focus on growing these assets now.
Understood. And just one last question, sir. So, do we, so in terms of, the marketing activity that we are doing, I have actually seen a lot of that, happening on the ground, airports, etc. So just wanted to understand, do these, kiosks in the airport, etc., do they make money, or are they just, for the marketing purposes? And also, what are our thoughts on, performance marketing and new age marketing techniques?
No, the last part, I think, sorry, there a bit of, we're not able to hear you fully. The last point what you made in all this, it was not clear. So, can you repeat the last point? Hello? Last question.
Yeah.
So, airport you said something. You're not audible, Mr. You're not audible, Mr. Sorry, can you?
Sure.
No, please. Yeah, now you're audible, yeah.
Now, I'm asking, do the airport kiosks make any money at the store level?
Yeah, that was clear. No, that was clear. After that, you asked something.
Yeah. So the other thing is, what would be the proportion of our spends on performance marketing?
Yeah. Okay. So again, we are sort of a lot of digital marketing or performance marketing. So while you do some bit of branding as well. So large part you can say is performance marketing. In terms of the airport kiosk, it's a more of branding as well as monetization. I would say largely the branding. Yeah.
Understood. Thanks.
Thank you very much. The next question is from the line of Madhur Rathi from CCIPL. Please go ahead.
Sir, thank you for the opportunity. Sir, I wanted to understand, we have got 6 subsidiaries, I think that are making negligible revenues or that are loss making. So are there any plans to close the subsidiaries and reduce the compliance burden at the company level to reduce the cost till whatever extent we can?
No, the subsidiaries are set for certain purpose, and again they are doing the what is intended for, be it the agency or Dubai entity, other things. So as well, you have a strong finance team. So and these entities are serving certain purpose. So it's better to continue the subsidiaries. But they're set for business reasons. So I'm not finding any reasons to close these things because we don't see that there's an issue in terms of compliance and other things.
Got it. And sir, on the astrology segment of our business, sir, it seems, sir, this segment is kind of crowded. So if you could just help us understand how we will target the customers, or just if you could give a broad idea about how should we look at this business segment maybe over the next 2 to 3 years. And sir, I read somewhere that majority of these customers on these astrology apps are either NRI or foreign Indians outside of India, those kind of customers. So how are we placed to target those customers, if you can help us understand?
We have millions of users on our platform, including NRIs, and we have members across the world. Wherever Indians are there, we have the people from those countries using our product. So basically, we are looking at integrating into our matrimony product. Again, as I told you, it's AA-based astrology product. It's offering one question free. You want to see whether how that uptake is going to be for these offerings. And the first question is free. Post which user need to pay money and to get a subsequent question either answered by AI or human astrology. We want to try it out. And I think only a couple of months down the line we know that what's going to happen to this service. And one thing that again, since we have millions of customers, we also feel it's a AA powered. It's good to offer this as additional complementary service member also. So we'll see, probably few quarter down, 30 months down the line, we have better understanding of how it's processed.
Got it, sir. So that was from mine, sir. Thank you so much and all the best.
Thank you so much.
Thank you very much. Ladies and gentlemen, a reminder to press star and 1 in order to ask a question. The next question is from the line of Damodaran from Equitas Capital. Please go ahead.
Thank you for the follow-up. So again, on my question is on capital allocation, and you said to a previous question, you had answered that many jobs for the next 2 quarters you would be kind of looking at improving the product and will be in Tamil Nadu. But post that, you are looking at expansion probably in other adjacent states or pan India. So can you kind of give us an outline of what kind of spend you would be looking at there in terms of expanding there? Is there any budget that you can share with us? That's one. And even on your core matchmaking business, other than the large 3 players, I believe there are a lot of smaller players which are kind of profitable in your core southern region. So are there any acquisition opportunities that you're looking at or that you evaluate? So just wanted to hear your thoughts on this.
No, we don't see any significant player and a small player where the acquisition makes sense to our long-term benefit. So some other media companies or some smaller base. So if you're buying it and you're not buying any meaningful asset, it's going to produce a long-term return. So it can have a short-term impact, but long-term, that entity, that benefit, we don't feel would make sense. So consider the number of players, the revenue and everything, very small players. And so that's the thing. So we don't see any acquisition opportunity in this case. Again, we evaluate anyone who's service a niche market or some segment which you can consider, which at this point we don't see anything at this point of time. So in the past, we have done one small acquisition. There was a focus on one segment. So we don't see anything at this point of time. In terms of many jobs, again, we are ready to comment on whether what's going to happen next year, what are the capital allocation. We have certain benchmark to achieve in Tamil Nadu. So once you achieve a benchmark, then that gives you the confidence to go either across south or go pan India. So that will be decided probably only next year. So that point of time we'll have better understanding of whether we want to continue to strengthen Tamil Nadu or whether we want to go across India. So at this point of time, it's too early to comment on it, Mr. Daniel.
Sure. Thanks for your comment.
Thank you very much. The next question is from the line of Ashish Behra, an individual investor. Please go ahead.
Yeah, thanks. So just wanted to understand, right? So how would a prospective user of love.com or Miralove.com, right, who are based out of US, how would they then be aware of the existence of these services, right? So basically, if you flip the question, how are we even attracting the users, right, in the NRI community? Would just like to get some sense on that.
So in terms of love.com, it's targeting Indian users in India. So love.com pretty much focus on the Indian users. So which we understand the consumer marketing in India, that's one of our strengths. So that's not a problem. When it comes to Miralove, it's a long term for Indian diaspora. There is a consumer marketing strategy. We know how to large extent, how to reach NRI and also leverage some of our strengths also. Since we've been marketing for this market for a very long time, so for Indian outside of India, we leverage our understanding of reaching out to the Indian diaspora outside of India. We leverage our marketing understanding, marketing capability to reach. Miralove is very, very small at this point of time. You are investing for the future. Consider the diaspora population, the sizable chunk is there, and the needs are slightly different. We are looking at that as a sort of keep investing a small amount of money, build a base, and probably look at the monetization at a later stage. It's a more investing for the future.
Got it, sir. Just a different take on one of the previous questions, right? So I think there was a question around, have you looked at smaller players for acquisition? Maybe, sir, would like to get a view, have you been evaluated amongst the top 2 or 3 players for an acquisition, right? Is this something that you could be interested in to get a pan-India foothold rather than the, rather than being the top player focused on the south with very strong strength, which the northern players are not able to get into?
Yeah, no, but we are a strong player not only south. East, we are a very strong player. We are a strong player in west as well, Maharashtra. Except north, we are one of the leaders. We have good market share there as well. Obviously, it's a highly contested market. It's not the 3-player market, and there are challenges. So there is opportunity to acquire. We will do that, but again, at this point, we don't see that is on the cards. That is that. So if there is in future the opportunity to acquire, we'll definitely very much be open to it.
Okay, got it.
Thank you very much. The next question is from the line of Tushar Tekande, an individual investor. Please go ahead.
Hello, am I audible, sir?
Yes, please go ahead.
Thanks for the opportunity, sir. Sir, I have a couple of questions. My first question is on the front of average transaction value. So this quarter we have seen 11% increase in the ATV. So what factors are driving this, increase in the average transaction value, sir?
It's a combination. One is that the long tenure package, plus also the personal services growth, which are on higher ARPU. The combination of both the factors.
Okay. And the second question is on the front of our efforts for doing new initiatives. So just wanted to understand every quarter how much cash burnout we are doing in basically experimenting these new initiatives.
It's a few crores a quarter at this point of time.
Okay. Thank you. That's from my side. Thank you.
Thank you very much. The next question is from the line of Mohit, an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yes, Mr. Mohit.
Yeah. So I had just 2 questions on the company. One is on a few metrics. Can you give me a few metrics like what is the conversion rate if suppose 100 people register on the platform? How many converts to actually the paid subscribers, and what is the subscriber renewal rate? Like suppose if a person offers 3 months of subscription, are they valuing up and getting to 6 months or 9 months subscription?
Sorry, I missed the second part. Sorry, I was just thinking. Yeah, please go to the second part. I understood you.
First question was the conversion rate. If suppose 100 new people are registering on the app, how many actually convert to the paid subscribers?
Yeah, correct. I got it. Yeah, second part. Yeah.
The second part was around the subscriber renewal rate. So suppose somebody is getting a paid subscription for 3 months. So is there are they opting for higher months of subscription like 6 months or 9 months?
No, the first question, around 10% they go for the paid subscription. So maybe a little over 10% also. Depends on the market, depends on the segment. In terms of renewal, most of people end up in by and large choosing the shorter duration packages. Majority will go for shorter duration. They also renew for shorter duration.
Okay. And just with regards to the Make My Wedding model, so we have changed from subscriber model to now commission-based model, right? So based on that, can you give me any growth guidance on the revenue or, what is the timeline for the break-even of that particular segment?
No, again, we are experimenting in Tamil Nadu because of the commercial-based model. So give us a couple of quarters. Okay? Because very, very early stage, we want to kind of get the product market fit right, and then we'll be sort of pushing to come on.
Okay, sir. That's it from my side. Thank you for answering my questions, and all the best.
Thank you so much.
Thank you very much. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Thank you so much for your continuous support. Look forward to talk to you all in the near future. Thank you so much. Have a good evening.
Thank you very much. On behalf of Matrimony, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you. Thank you.